Welcome to the latest Motley Fool Scoreboard. I'm on and shockingly, we've got longtime fools Tyler Crow and Jason Hall giving a 1 to 10 rating to renewable energy play NextEra Energy. They must have been Monty Python fans because their ticker symbol is NEE, NEE. Go to the business first, including factors like industry and competition. A 10 is invincible. A 1 is hopeless. Both of you are at 9s, Tyler.
I mean, it's a regulated utility. Utilities are a really durable business, especially regulated ones like NextEra Energy's core business, which is Florida Power and Light. At NextEra, it has the rarity in utilities where it's growing at a faster rate than most other utilities because it has a combination of strong demographic trends in Florida from migration, things like that, and it has an unregulated side of the business that it builds renewable energy capacity, and it's allowed them to grow considerably faster than you would consider your run-of-the-mill regulated utility.
Yeah, what Tyler said, but I think it's especially the combination of the demographic trends in its geography, and then bolting on that unregulated business that has so much room for growth. Even though we'll talk about it, they have had a little bit of a flesh wound with that business on their bottom line.
Yeah, when I saw the 9s, I was amazed, and then I was like, oh yeah, it is a utility. It makes some sense. Let's talk about management. A 10 is Warren Buffett. A 1 is Homer Simpson. Jason's at a 7. Tyler, you're a little lower at a 6.
Yeah, I'm docking it some points because it really dragged its feet with a subsidiary, NextEra Energy Partners. This was a financing vehicle for a lot of its renewable energy. It's now changed its name to XPLR Infrastructure because, I don't know, maybe NEP was just too toxic of a name these days. It was a project finance vehicle that they over-leveraged, but kept telling all its investors that everything was fine and the dividend growth would continue. And then I think it was like last... Yeah, it was just they needed to bring out their dead though, apparently, because like last month, the XPLR Infrastructure suspended its dividend indefinitely to repair the balance sheet. So it was really kind of pulling the wool over investors' eyes here. Even though it is a subsidiary, NextEra Energy had considerable control over the business.
Yeah, and it's definitely more than just a scratch too, because the idea was to drop down those assets to what was formerly NEP, but still through its equity ownership and control of the partnership to get dividends and get cash flow from them. And now that's affecting it directly as well as the shareholders of that business as well. So this was a management mistake. And if you run a utility, you have to get the financing right for your non-regulated business because you don't get regulators to bail you out at the expense of ratepayers like they do on the regulated side. So that non-regulated business, you got to get your financing right. And they've stumbled in that.
Let's talk about the financials. A 10 is a fortress. A 1 is yikes. Both of you are at a 7, Jason.
Yeah, this is the one thing that they haven't done as well as you would want to see for a utility company. The reality is that over the past decade plus, growth was wallpapering over what was a growing problem with a lot of their financing. But when the growth slows, the warts show through. But again, I'm picking nits here because this is a very strong business and its balance sheet is perfectly fine. And it does have plenty of ability to continue to grow its cash flows just based on being an adequate managed business that happens to have all of the benefits of growth that most utilities just don't have.
Yeah. The financials for the parent are still, I would say, decent, not great. Because it did transfer a lot of debt risk to that subsidiary that we've been talking about. The one thing I did notice on its most recent investor presentation is its debt levels are hovering relatively close to a threshold that would merit a credit rating downgrade from the ratings agencies. So something to monitor. And, I would like to see how it manages its spending and leverage in the coming years. I mean, obviously the regulated side, probably not as much of a problem, but that unregulated renewable power business is going to significantly change, and I'd like to see what they do with it.
Jason, for valuation, I have these questions. 3, how well will NextEra stock do over the next 5 years? How safe is it, keeping in mind a 10 is a sure thing, a 1 is a lottery ticket, and what is the airspeed velocity of an unladen swallow?
So my question for you is that a European or an African swallow? Don't say that because we need you around for a couple more minutes to finish the show on it. So my safety score is an 8, and I expect returns around 5 to 10%. for the first time in years, thinking about the safety side, NextEra Energy is actually priced appropriately for a utility company. Along that great growth run, we saw so much expansion of its multiple. So now you get to a reasonable valuation that's in line with most of its large peers. Combine that with its ability to grow earnings at a faster rate, 3% dividend yield. I think its dividend is pretty well protected at the corporate level. And I think, again, hitting that 5 to 10% range of returns without the downside risk that the valuation created in the past, when money was cheap and investors didn't appropriately price that risk of higher capital costs, I think the higher end of that outcome is probably the most likely case.
I actually had the same in returns and safety. Management was protecting earnings growth rate in the 6 to 8% range for the foreseeable future, and similar dividend growth, which kind of lines up with its historical returns. But basically, the stock hasn't done anything for the past 5 years. And so, and that's come from valuation contraction. It went from like 60 times earnings down to 20. So I think it seems more appropriately valued now and can land close to that 10% range.
Time for everyone's favorite topic. Jason, is there a company in NextEra Energy space that you like more?
So I'm going to pivot a little bit because I'm contractually obligated to mention a Brookfield entity in every Motley Fool appearance that I make. But seriously, I want to talk about Brookfield Renewable. Like NextEra Energy, the stock is down a lot, but the difference is that Brookfield Renewable's business has probably never been stronger. And the worries about utility scale wind and solar are probably inflated right now because of political reasons that I don't think are going to carry over to the real world decisions, particularly for a business that's increasingly growing outside of North America. So whether it's the partnership, BEP, or the corporation, BEPC, I think that's where I would be looking right now.
Well, I'm also contractually obligated to mention the most obscure stocks possible whenever I make my appearances. So I'm going to go with Pinnacle West Capital Corp. This is actually the Arizona regulated utility. So same idea, regulated electric utility. Similar demographic trends as Florida in terms of like net migration to the state, favorable demographics. Also, it has a massive industrial manufacturing growth going on recently. I don't know. It seems like every single time you read a newspaper about a new manufacturing plant, for some reason, it's in like Chandler, Arizona for some reason. So I think that will drive electricity demand in the state significantly, all benefiting both unregulated people like Brookfield as well as Pinnacle West. The projected earnings are a little bit slower than NextEra Energy because it doesn't have that unregulated side, but it's a much more conservative balance sheet and trading at a considerably lower price to earnings multiple.
Thank you to Tyler and to Jason. They've given NextEra Energy a solid overall score of 7.1 out of 10. Excellent scores for the strength of the business and its safety. Makes sense for a utility. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Phillips 66. Till then, Fool on.
If we want to go really Monty Python, like halfway through Anand's conclusion, the police would have to come up and arrest him.
Exactly.
The story on that was they ran out of money, so they just like had them get arrested at the end, and that was the finish because they didn't have any other way to finish it with their production budget.
They didn't actually have an ending. Yeah.